Welcome to the channel for a deep dive into the ultimate guide for candle closures. Before we talk about entries or targets, we have to understand the language of the candles themselves. Specifically, we need to master the candle 2 closure. In this model, everything starts with how a candle closes relative to the previous one. You need to distinguish between two types of closures, a continuation closure and a reversal closure. Imagine a bearish trend. A continuation closure is simple. Price sweeps the previous candle's low and closes below it. That tells us the market wants to keep going down. But the magic happens with the reversal closure, or what I call candle 2. This is your turning point. In a bullish reversal scenario, candle 2 sweeps the low of candle 1, but then rallies to close back inside candle 1's range, above the low. In a bearish scenario, it sweeps the high and closes back below it. The golden rule: you cannot just trade every sweep and close. You must pair this with a higher time frame point of interest, like a fair value gap or an old high-low. Think of it this way: candle 1 sets the range, candle 2 hits a POI, sweeps candle 1's liquidity, and closes back within the range. This gives us our bias, candle 3. This is where we look for the expansion, which we'll cover in the next episode. If you spot a candle 2 closure on the daily chart, you now have a bias for the next day. You expect the next candle, candle 3, to expand in the opposite direction. Now, before we rush to trade candle 3, we need to talk about wick sizes. Not all candle 2s are created equal. To trade successfully, you need to understand the difference between an expansion candle and a reversal candle based on their wicks. The expansion candle. This has a small wick and a large body. It opens, makes a shallow run in the wrong direction to trap traders, and then spends the rest of the time expanding in the true direction. This supports continuation. The reversal candle. This has a large wick and a small body. It spends most of its life going the wrong way before coming back. Why does this matter? If candle 2 is a reversal candle with a massive wick, it has already done a lot of work. It has used up its energy returning to the open. I am less likely to trade a continuation immediately after a massive wick because the market often needs to reset. Ideally, we want candle 2 to have a small wick or a shallow opposing run. This implies that the market reversed efficiently and has plenty of energy left to expand in candle 3. If you see a giant wick on candle 2, be careful. You might want to wait for candle 3 to close before doing anything. Alright, we have our candle 2 reversal. Now we look to trade candle 3. This is often the expansion leg where the easiest money is made. There are two ways to look at candle 3. 1. The continuation play. If candle 2 was a clean reversal, we enter candle 3 expecting it to expand. Bullish plan. We want candle 3 to open, trade down slightly into the upper half of candle 2, and then expand higher. Bearish plan. We want candle 3 to open, trade up slightly into the lower half of candle 2, and then drop. Execution. We drop to a lower time frame. We wait for a change in state of delivery to confirm that the daily wick is finished, then we enter. 2. The candle 3 closure. Sometimes, candle 2 doesn't close back inside the range. It sweeps liquidity, but closes outside. Is the trade dead? No. We wait for candle 3 to close. If candle 3 engulfs candle 2, or closes strongly in the opposite direction, that becomes our confirmation. We treat that as a candle 3 closure, which confirms a swing, and we can then look to trade candle 4. So you missed the reversal on candle 2, and you missed the initial expansion on candle 3. Can you still trade? Yes. Enter candle 4. By the time candle 4 opens, if candle 3 was a strong expansion candle, we have officially formed a swing high or swing low. Fractal note. A swing low is a low with a higher low on the left and a higher low on the right. Once this swing low is confirmed by the close of candle 3, we have a very high probability that the trend will continue for at least one more day. The strategy for candle 4. We use the equilibrium of candle 3. Since candle 3 was a big expansion, we don't expect deep retracements. Bullish. I want the price to hold the upper 50% of candle 3. I'll mark out the EQ. I want candle 4 to open, dip into that upper half, but not below the EQ, and then continue higher. Bearish. I want the price to hold the lower 50% of candle 3. This is pure trend following. We aren't trying to catch a bottom anymore. We are hopping on a moving train. Let's bring this all into a mechanical daily routine. How do you wake up and know what to do? You look at previous day high and previous day low. Scenario A, the reversal day. If we are looking for a reversal, maybe we hit a higher time frame PD array. We want to see price sweep the previous day high or low. We look for a shallow wick. We don't want it to smash through, just poke it. We drop to the lower time frame, 1 hour or 15 minutes, and look for a change in state of delivery. Once that confirms, we target the opposing side of the range, the EQ or the other side's liquidity. Scenario B, the continuation day. If we have a candle 2 or candle 3 closure and we are trending, we do not want to see a sweep of the previous day high or low immediately. Bullish continuation. We want price to open, make a low, open low high close, ideally respecting the previous day's EQ. Then we want it to expand through the previous day high. Bearish continuation. We want price to open, make a high, open high low close, ideally respecting the previous day's EQ, then expand through the previous day low. Final summary. It's all fractal. A candle 2 closure on the daily sets up a candle 3 expansion. A candle 3 expansion sets up a candle 4 continuation. You simply align your lower time frame, 15 minutes to 1 hour, structure with this daily narrative. If the daily says expansion, you aren't fading highs, you're buying dips. If the daily says reversal, you wait for the sweep and the close. Peace.